The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. Good to be here. This is the Wednesday edition. This is August the 12th. My pleasure to be here Monday through Friday. Hey, wait a minute. This is a very interesting thing. All of a sudden, you're seeing selling red in the market for a few days. So, all right, let's go through the numbers. And great lineup. We had John Logan, Larry Pesavento, Tom O'Brien. I hope I can give you as good a comprehensive look at the markets in my hour. And then, of course, it just continues through the day. Hey, let's go to the Dow. Dow down 210 at 17,192. Let me do this together. Yeah, I think it's a good time to do it together with the charts. We'll start off. I will show you the E-minis. Left side has the daily. Right side has the 120-minute chart. What am I looking at? Left side, right side price time match. It extended below. It went underneath the 2056.50. Twice hit low back in the 27th, 28th of July. Big arch formation, takes out the low, and we'll see if this bar is going to close above 2056.50, or if it doesn't do that within 2 bars max, 220-minute bars. That's not a good sign. Look at the weekly chart. Been focusing on this for forever. This is, now how did that happen? Let me just take a drink of water. So what we're looking at here, and this is going to be very interesting after all, it's been since February-ish, somewhere around there. Actually, I started talking about it in November, December, but since February, we really have been making this arch formation. You can see it very well in the weekly chart. Look at this beautiful arch formation. And what happens is, it's just a perfect, there's a symmetry to it. I guess that's why I love charting so much. There's such a beauty in the charts. I remember when I used to show my black charts, and we used to talk about it as being perfect for the Museum for MoMA in Manhattan, Museum of Modern Art, because these are just exquisite patterns. Look, how does the market know from 1815, the round number low in the E-minis, back in October the 15th, how did it know that as it went higher, it would start to take time rather than price to the upside, and that price would form some kind of an arch formation. And then there would be a midpoint at 21, 26, 25. And in this particular instance, there was one single week spike up to 21, 26, 25. So on the week of the 22nd of May, it gets there, pulls back to 20, 34, and whoop, within 3 weeks, it hits 21, 26, 25, exactly the week of the 26th of July. And now we're on our way down. The Dow is making lower lows. The weekly yet hasn't made it. 2034 it needs to take out. 2046.50 so far is the low of the day. So you can see why it's been important for me and for my subscribers that we've been monitoring and looking at the short side for so long. The frustration is that unlike, say, in August of 1987, where the market went to that high, I'm just guessing 27, 22, 28, something like that. I remember because I was just beginning to use the notation professionally, my Chapman wave notation on a closing price Dow chart and the FTSE and the Nikkei. So in this particular instance, the data says, hey, I'm underneath the 9-period, the 200-period exponential moving average. I showed you yesterday and the day before this symmetric triangle, and I said you've got very clear 2103s breaks to the upside. A break under 2060 starts to push negatively down, and the stochastic and the MACD are very negative, and that's the way we were expecting it to go. So the 200-period moving average at 2055, we're at right this moment. Testing, testing, testing. So let's go on with this. We've got the upside says that in the 120-minute chart, 2064 is going to be really strong resistance. Downside, a break of today's low would be really, that would just create a very bearish environment. But we're looking at many things. Yesterday we had a Chapman wave trend gauge flash again. And this particular trend gauge says that within 2 days of any sharp decline, you should have at least a 7 to a 9-point rally. Well, we've seen that twice. We saw that earlier in the morning, very early in the morning. And then we saw it again from the low today of 20, what did I say it was? 46? 20, 46, 20, 46.50. We're already at 20.55. So there you are. There's your 7 to 9 points. And that usually affects the cash index. All right. So it's pretty much done its job. And yesterday it did the job of, on Monday, calling for a sudden rug pull to negative in the Dow. And certainly was that yesterday. Let's go on. INDU. So the Dow is down 207. Coming off the low today, I must move this so that I can see exactly what the numbers are. The low is 17,125. Now it's important for me to show you something that I show my subscribers every day. What I do is I show the Chapman wave notation and the variations if they are. I show the expectation. I show the cup formation. I show the sine wave arch formation. And we monitor these. We monitor the 9-period moving average, the maroon moving average of 17,464, which it closed under yesterday. We monitor the left side, right side price time match. What does that mean? It means from an identifiable low bar, this is a low bar of 17,034 back at on the 2nd of February. Started a huge move to the upside. In the Chapman wave, you expect from a low bar, if it's going to succeed in going from a buy signal to a buy mode, that buy mode would take you to at least a D. D, E, and F is where you start to get really nervous about perhaps this could be the pullback, and you monitor it and monitor it. Or if there's an instant within 3 bars, there's a new recovery high, that has the potential to recycle to a brand new buy mode almost immediately. So this is what I give my subscribers. Actually, there's a ton more information on this particular chart. Most importantly, I'm focusing on the MACD being very negative, stochastic being down in the 20% area, 25%, and way underneath the 200-period moving average, this light bluey gray line. And we're going to leg E. And I said that there were so many instances where we came off a recovery low. Is it called a recovery low? Well, let's call it a low bar, and make a V-shaped pattern and then spike to the upside, which can fail. And we saw that the other day. That was on Monday. Tuesday, we gave it back, and we went a little underneath it, but we didn't go to a new recovery high. Today, we plummet below it. It says that there's now a recognition of this bearish phase, number one. Number two, I've been talking about the rotational correction, and that 17,034 would be my left side to that point there, right side to yesterday's low. It could extend to today, of a test of the 17,100 to 17,030 level, 17,000 level. And that's exactly what we've done today. Day's young. We'll see what happens afterwards. But it is a leg E to the downside, so you could get a bounce at any point. And number two, as I said, lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. That's what we're going to be anticipating in the daily and then the weekly chart. We haven't got anything yet in the monthly chart. Okay. So that's that. Then for my subscribers, I do this quintile. I do these 5 categories here. 120-minute Dow showed the arch formation. I also showed, let me open this up and I'll show what we've been focusing on. So we've gone to a leg D, and that says a D in the 120-minute chart of the VIX index says, hey, be a little careful here. Why? Because at this particular point, you could get a peak D and have a sudden pop to the upside, yet another pop to the upside. So the high of 1628 in the VIX index is telling us a great deal of information. Number one, leg E/B to the downside of the 120-minute chart of the Dow is telling us a great deal. We've gone underneath that red line support. We went right to the 1628, $16. I mean, how I love these techniques that we've developed over the years. Look, the higher peak F in the 120-minute chart of the Dow is 1627. I had drawn this in left side, right side price tie match. I had drawn the Chapman wave inside wedge resistance line. And I said, if anything was going to work, then we should see a pop today into the 16s and a leg D above 14.58. And that says that we might get a left side, right side price tie match. Darn, if we didn't just do that. 1628 went to a new recovery high, 1 penny higher. So that says, yep, we've done that. Now you've got to be a little bit careful because buyers could come in at any moment and push the VIX down a little bit more. But wait a minute, what about the weekly chart of the VIX? Weekly chart, are you kidding? This is only halfway through the week. We can't even be discussing it as if it's closed. We can discuss it as if it's still active. And we've got A, B, C, D in the 120-minute chart of the VIX. We went through that in this soft W formation, 2 U patterns, but on a slope, right? And you've got, finally, you've got a pretty decent green candle, just like you had 3 weeks ago until the end of the week. And this green candle has once again touched 16.17, the 200-period exponential moving average, and that's suggesting loud and clear that on the right side of the market, meaning the right part of the arch formation, you're just beginning to get a right side of the cup formation in the VIX index. But believe me, I'm not going to rest until I see that volatility index pushing back into the 20s to give me the comfort to say, finally, we've got turbocharged momentum to the upside. These single 1 or 2 day pops to the upside and then a failure, I'm tired of that. It should not be happening. Okay, so now let's continue. So Dow, 17,034 is my real, a close below 17,000 is very negative. I'd said for months, 3 out of 4 closes below 17,500 is going to be very significant for the weekly chart. So, question of the gen, Basil, please answer this. Z. Basil, please explain Chapman wave counting ESU 5 daily. Why is July 27th low not A and not August low not B? Oh boy. So what are we looking at here? ESU daily. All right, let's go to it. ESU daily. Oh, no, wait a minute. You should know, John. I always do this. Remember, this 2126 was the high, and you come straight down in the daily chart, and you stop at 2056.50, and that makes an A. And then you rally back up. But in my work, I found over the years, it's absolutely imperative to count your only obligation is to count every peak and every trough. I mean, there's nothing easier than that, right? And that says that that trough right there is a peak A. If we overlapped and went under 2056.50, that would be an overlapping B and be very negative. But instead, we closed above that 2056.50 low. We went to 2062, rallied up to the trend line resistance, and back. Today, we've gone down to leg C. Hope that answers your question. It was a good question, but I think you might have forgotten that I count all the beats. Hey, is that the music already? I haven't finished my analysis. Dow's down 209, S&P's down 23.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. What I'd like to do actually is to do this to cover tomorrow, maybe Friday. I'm on the road and I just don't know whether or not I'm going to be able to have access to do the charts. We'll see. So just in case, here we are. What I'm looking at in the arch formation of the S&P down 25 at 2058, it broke the 2061 200-period exponential moving average, but this is intraday, so we have to wait on that. However, the left side low of 2044.02 made on the 7th of July, this is the S&P cash, that's a target. It doesn't say time, it doesn't say just when, but what I would expect in this acceleration move down right now, that if there's not a close in the Dow, minus 87, something like that, getting back a huge chunk of the loss, and the S&P would be about minus, let's just talk about it as being minus 11 or minus 9 at the end of the day. Instead, we close somewhere around here. That's just going to aggravate a chunk of stuff. And what it's going to say is that this arch formation is now smaller and more accelerated, and you could very well get, remember we spoke about this, I even drew it in, but I took it away the other day. I think I did it on the SPY for our caller, because I was looking at the one-to-one. This is an A to B equals C to D. This is your classic lightning bolt run, and that says, yep, you could test the 2046 level, but if you go even that far, 2044 becomes highly very much like a magnet, And the stochastic still at 41%. I'm expecting by the time we get any really strong, powerful buy signal, we'll be way down in the single digits. So there's a long way to go. And the MACD is still turning down. One of the reasons why we've been short, we've been adding to short. It's very interesting. I'm going to go through this because I want you to show you that the resistance now is at 2086, way up there in the 9-period exponential moving average. It coincides with the 9 of the daily. It doesn't happen very often. Often you get the 200 coinciding with the 9. However, look at this. When we are looking at the S&P, you've got that arch formation. And that arch formation says, I wonder if I did it in the SPY. Let me just, yes, I did. Okay, and in the SPY, what I had drawn when we had our call the other day, I'm trying to think when it was a few days ago. I said if you go to the high bar of 213.78 made the week of the 22nd of May, I mean, you get a left side, right side. This is really fascinating. Wow. I hope I'm able to do it on Technical Friday. I'll talk about the Chapman wave, unconventional flat base restart. Now that sounds like a really complicated thing, but I'm only explaining what the technique is. It's a technique that says that there was a run to the upside and a pullback. And that pullback had the characteristic to say I'm forming some kind of a base, but at the same time, I'm going to extend my buy mode. And that buy mode continues until a certain point where it reverses. And then you come back to the level, in this case, 204.12. You go to 204.11, and you spike maybe to new high, maybe not. This is the right side that is most vulnerable. Why? Because in all this period of time, is what I was discussing, the MACD and the stochastic have just been plummeting. There's no real support here other than for a big pop-up like we saw the other day. And that says the 204 level, when it's taken out, it should go right through it. And then very soon afterwards, there should be another rally, and then former resistance becomes support. And that's this trend line here, which we haven't broken. The pink trend line has got another one. It's got 2 weeks to do it. 3 weeks. 1, 2. Another 3 weeks to break 204.11. And I think it's going to be done a lot sooner than that. And then all of a sudden, that pink dashed line becomes the resistance between 207, let's call it, and 209 in that area. Okay, so that's that. Those are the parameters to look for. SPY would test the left side low of 204.11. That's going to be important. Let's go on. IWM right here. Down in leg E. There it is. There's that arch formation. Look at that beautiful arch formation. I drew the rectangle and said if the MACD and stochastic are still going to decline, then that low bar right there is going to become quite vulnerable. 120.24, and we're at 118.65. IWM, but most importantly, remember what we were talking about? That the IWM monthly chart with that doji candle at the top, with the MACD and stochastic very poor, suggests that this is going to be a peak here. This is this top is going to be a lot more serious than many people think. Now, I got not only one, but I got a bunch of emails from different people talking about the death cross. I think I might have been mistaken, but I think I didn't hear, but I saw Larry featuring it. I'm almost sure it was Larry. But, how can I put this? I respect all these different techniques, but my impression is that when you get the death cross, you're really close to at least some kind of a rally before the trend continues. So it can be confusing unless you put it into the category of very important information, a confirming signal rather than a trading signal. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. So a couple of things that I had a couple of questions during the break. Let me just run the numbers. Okay, QQQ series. QQQ was holding so well. It went down to the trend line, the down channel support, and it's bounced a little bit. It's down $1.12. But it's that a weekly chart that says a close at 109.03. It's minus 111. A close on a weekly basis under 107.70. Still a way to go there. Starts to impact the monthly chart for the first time, but look at the weekly monthly chart. The MACD is turned down. It's negative, but still very high, but negative. The stochastic's at 87, still high, but much lower than it was earlier at the previous highs. And the on-balance volume couldn't rally. So I'm very suspicious of this, and I think that the Qs still have any bounce material. People will gravitate to many of the Q stocks. This will now be answer one of the questions about Facebook. You know, Facebook, I love Facebook. I think, we got it way back, and we got a tiny little profit, and then I didn't get back in. It's just dumb. Because that it's social media. That's FB. It's traded down $1.62, 91.99, 8 points off the high of 99.24. I think it's going to be going down, and then it should start. You'll know at 86 to 85 whether Facebook is starting to build support to hold the monthly 83 9-period moving average, and that's going to be very important. Here's another thing. Facebook, I would rather be building up a portfolio of stocks that I would like to own. But when the tide changes, I don't, when you throw a piece of driftwood out and the tide is going out, what happens to the driftwood? It can't come back to shore. It keeps getting pushed out. It comes close, but never to shore. If the tide's coming in, you want the driftwood to go out and you throw it, what happens? It keeps going toward. If the tide's coming in, the driftwood comes in. If the tide's going out, it keeps going out. Just keep that in mind. So when the larger tide is changing, you've got to be careful on what potential longs. So I'm just saying, wonderful stock. If you have it, perhaps a core position, keep the core. I'd take something off and just treat it as a trading position. Each time it gets down maybe 5 points, I'd buy it and get out after 3 points. And that's lower lows, lower highs. Maybe that's the way to think of it. Okay, fabulous stock for the next phase on the upside. Okay, now that kind of contradicts this, the Hindenburg. It contradicts the 50-200 period death cross. It says, I still think that there's going to be another very powerful move to the upside. I think it's going to come from quite a bit lower down. Okay, that's just the way I'm looking at it. But at this point, we're short. We've got no longs except in a different sector, completely different sector. Okay, so now let's do this. We've got, I don't know. Okay, now I want you to quickly look at the NYA. Then I want to get out of these and start looking at some things that are more specific. See the NYA, lousy action today. Looks almost certain that it's going to test the 10,622 in the next, within the next week, and maybe break under it, and then all of a sudden you get this pattern in the weekly chart, in the monthly chart, starting to fail. Look at the dollar, and I did some work on the dollar to get the notation, a correct Chapman wave notation. This is really the interpretation. Remember, I said everything about that candle to this candle to yesterday's candle suggests that this is a right shoulder failure pattern. I don't know why I can't get the notation to work what it did. There was the instant restart. This is what I wanted to talk about. Oh, I need more time. I don't want to talk about it now. I'm just going to say this is a great example. I type it in. This is the real example. Chapman wave, unconventional, flat base restart. Okay, remember all those words? It's just explaining it. It's like saying, I'm walking to that spot, but instead of saying I'm walking to that spot, I'm saying I'm walking along the pavement to that spot, or whatever it is, just explaining, okay? And what this one says is that when you finally make your D based on the instant restart and the flat base restart by going underneath the starting point and then quickly breaking above it, and then keep pulling back towards the support line, and I'll tell you where the support line is in the dollar. It's at 95.45. It says, watch out. Here's your Chapman wave inside wedge. There's your price time match, and it says by the week of the 20th of August, the dollar should be testing 95.45. What is it? It's 55 cents away. I think it's going to be sooner than that. So this was based on that as my plumb line, that bar right there, the bar of the 27th of July. Now, what's really important about it says you're going to break underneath. Then you're going to try to have a rally. And that rally could be quite sharp initially, but then you're on your own. So in other words, what does this technique do? It gives you the whole panoply of events, and then it says sharp decline. That's part of the program. And then a sharp rally, not nearly as sharp as the decline, but a sharp rally. Then you're on your own. You have to use other techniques because that's all it does for you. All right, it's a little bit like the Chapman wave stalk leg, where you get the leg, the body, oval body, you break out to the neck, then you get the head, then you get the beak. The beak has a whole bunch of connotations as to where it's going to go and how it can bounce. All right, so more importantly is that you're just in the monthly chart, you're just in the trading range. I'll just do this again, as I did once before. You're just in the rectangle trading range, digesting a huge gain. And in the weekly, you're starting to get the pattern that switches between a cup and an arch. And that says the dollar at 94.70 is going to be very critical. Is it going down further? Well, the EUR, USD, I don't want to get into the commodities now. You've got some wonderful technicians here who can do it all for you. So I'm just going to stick with this. The euro-dollar currency pair, leg D up. Very powerful move. But the weekly chart is suggesting just another series of arch formations. Don't get carried away. I'm going to go to Brent in Martinez, California. Brent, how are you?
Doing well, Basil. How about you today?
I'm well, thank you.
Very good. I talked to you, I believe it was last week. It was right after Priceline had come out their earnings. It had the big gap up.
Correct.
I told you that I bought puts that morning as it gapped up. It was tricky to buy them. I wish it had stayed up there a little longer. It pretty much gapped up to its high.
Right.
It's always a little tricky with the options. Ideally, they would trade for about 10, 15 minutes to kind of settle out and not have the big spread between the bid and the ask. But
these didn't, huh?
I've done them before. You just have to throw out a number that you think in between somewhere
and grab it.
Yeah, I think there's people that when you have that kind of a move, they're a little desperate and they just kind of want to get out because they were wrong.
Right, it's like the round numbers, and it had a round number, 13.95 on Priceline on the 5th of August, trading now at 12.90, 100 points lower. And so just let me do this quickly because I don't want to lose my train of thought. The A, B, C, D, E, peak E in the 120-minute chart, a gap to a D, E, or F on news-related, any news-related item that takes the price certainly to a round number high, especially if it's an all-time high, that starts to fail and takes out the low of that bar, as I spoke to you before, taking out the low was a big negative, suggests that it is an emotional response. It's short covering as well as some new buying. And now what I'm looking at is that there's a real good chance that 1210 is the 200-period exponential moving average in Priceline, the 120-minute chart. That would be, 1291 we're right at now. That's the 9-period moving average in the daily. But 1210, I'm suggesting that I can see Priceline pulling back to the 1231 9-period moving average of the weekly chart, but I can even see it going down to test the low 12s, 1200s, that is.
Yeah, it has a tendency to do this. There was around the same time frame, I want to say last year, and it was probably the same kind of thing after their earnings where it hit same thing around 1370, I want to say, and it proceeded to spend the next 2 months just dropping. And it just has a tendency where it'll have a trend one direction, and when that trend changes, then it seems to be kind of this precipitous drop for a period of time.
One thing that I do want to say to you, and just to keep in mind, and you'll have a price that's going to tell you if it goes above 1347 to 1352, I'd be just a little cautious to say, hey, I want that arch formation. I want you to come right back. I don't think you can get there, but that would be the level, number one. Number two is the monthly chart I'm calling right now a right arm extension leg F, but the technicals will turn up if this can hold for 3 weeks above the 1345, 1350 level. I think that will help it a lot. I don't think that's going to happen. I just wanted to give you the other side of the story. My thinking right now, this thing is going to have a nice little bounce any day now, but then it's going to make an arch formation and come right back, and 1277 is the support to monitor. It breaks 1277, and I think that's pretty much. Now, I've got leg C, probably peak C in the weekly chart, but I'm looking at the monthly and the daily, and I'm saying, okay, weekly, you're just going to have to be subordinate for the moment. So I hope that helps you.
Yeah, I took some off this morning when it got to 1282, so I'm...
All right, that's a nice way to do it. Oh, if you're taking some off, then the way to look at that is on a bounce towards the highs that were made 11:30 on the 10th, towards the... I don't know if it can get there, but let's just say 1328 to 1334. Yeah, about what I was saying before. That's the area that I would probably be looking to put back the put options.
Okay, very good, Basil. I'm enjoying the silver trade, too. That's going well.
Oh, thank you. Great. And congratulations. You're really doing some beautiful trading. And I think a lot of people are being educated by your calls and the way you've described them. Even in the Denya, we've got a nice comment here about your particular trade. He's an excellent trader. Looks at very unique plays. His participation in the Den would be of value to him and the Den. Well, there it is. By Z in the Den. Thanks so much for calling, Brent.
All right, thanks as always, Basil. Have a great day, and I'll talk to you soon. You take care.
Thank you. Always appreciate your always appreciate your calls. I do want to do a couple of things here. First of all, I'm going to go to the IYR. So Jane had asked me, what about the IYR? Well, the IYR, with the iShares Dow Jones US REIT Index Trust with SPG, AMT, CCI, just a whole bunch of those commercial properties in them, has held very well, except for one little thing, that the arch formation forming in the weekly chart is going to give us a tremendous amount of information. Why? Because of the long-legged doji of last week. So I'll make it real simple. A close above 75.59 was the high of the week of the 7th of August. A close in the 76.70s would suggest that you can go to the next series of highs, and that would be up at the 77.20s. But a close on a weekly basis underneath last week's candle would be really negative. In other words, 73.45. So a close under 73 this Friday, especially if it's this Friday, would suggest that the arch formation is starting to take its toll on even the IYR, which should be considered right now as a beneficiary in a way, because you've got a nice yield. I mean, talking yields. But I'd still be real careful. Right now, if you're short, I'd just say 75.50s, 75.59 was the last high. A close above that, I wouldn't want to be short. They're much better looking short stocks. But on the downside, the close under 74, that starts to suggest that the candle of the 6th of August with a low of 73.45, that's what I'm talking about. That's going to be tested in 73.49 was the low of the 23rd. So those candle wicks to the downside are suggesting price at some point is going to fill that and go underneath it. This is the way I'm looking at it. But I would not either short or go long the IYR. I'd step aside. I'm just doing this in case you are in the IYR and you wanted me to talk about real estate. I think I'm going to be in a better position to talk about real estate in a little bit more depth on Monday. So if you could just remind me, Jane, I'd appreciate it. I can't talk now, but there's stuff that I'm doing right now that I want to. I just feel that I'd like a lot more information, facts rather than guesses. So that was the IYR. Facebook I just did. AHT. We had this once, and I thought of it as a REIT play, Ashford Hospitality Trust REIT. And we got in, let me just double check here. Yeah, we got in at 8.88 on the 9th of July, and we lost 20 cents. What's interesting about this is that it came back, retested in August the low, made a slightly lower low than 761, had a fabulous day the last 2 days. I didn't really want to touch any of these, especially the small ones. Before I was looking for small stocks. Now I'm looking for small stocks in other areas. But I didn't want to touch this, and the reason is, look, I didn't even look at it the first time I looked at it today. It plummeted today down to 770. I'd be real careful. I don't think this is the kind of dividend play that I'd be looking at. Same as some of those oils as dividend plays. Be real careful. I don't want capital loss waiting for a 6 or 5% gain in the yield. That doesn't make sense. So I wanted to show it, but I didn't expect that it would look like this. I thought it would come down, but it did it in one day. Be careful. AH is Ashford Hospitality Trust. Next thing I want to look at was MRD. I didn't do much work on MRD. I had once before, but this is acting beautifully. Look, that's yesterday's close. That's what I was asked about. And now it's gone up again. What the heck is this? Memorial Development Corp. Memorial Reserves Development Corp. Reserves? Maybe this is part of the, I don't know. Maybe someone can tell me what MRD is, what they do. Great. It looks terrific. I'd have a tough time for one's own personal portfolio, not other than giving it as a call for the community. I'd say, wow, this is acting so well. I'd nibble on it here and I'd add a little bit at 1770. It's at 19.50. This is MRD, and it's trading up 55 cents, up 2.90%. And 19.50, and just stopped at the 200-period moving average. But you know what? It's dangerous. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks, we're back. So a couple of things that I want you to do. Dow's down 245, S&P's down 27. So you remember we were looking at, I wonder if it's going to work. There it goes. Nope, it's not going to work. So this is an oil and gas company, I believe, something like that, MRD. This is Memorial Reserve Development Corps, and we're waiting here for things to change over, and that's okay. So I want you to just talk a moment about, I spoke about the VIX, the Volatility Index. I want you to, if I'm able to do that, let me just, can't type in right now. That's not good. I don't know. It doesn't happen very often. Oh, I know what it is. Get out of that. There it is. Gone. Okay. So this is the Dow chart that we were looking at. Remember, it has this target right there. I circled it in. And that's why we're shorting the Dow. We got so many shorts. We don't have as many as we had the other day, but we did take profits. Now, I want you to say that we waited and waited until certain sectors were going to turn down, and turn down convincingly. I don't have it in front of me, but the Boston Globe had yet another article on the biotax and what's going to happen with taxes. Was going to happen just a whole bunch of things that could impact them negatively on a fundamental basis. And there's the IBB. We've been short. It's at 400.79. The 20th of July was the top. We've been in and out, short, long, but mostly short. And we were short at 393.10. Back on the, I can't remember what date that was. That was on the 21st of July. and it's trading now at 359. So the very most important aspect of this particular thing is there's the left side, right side price time average. To the day it touched that. Then it bounced, hit the 9-period moving average, and broke down. Now, this is a difficult sector because, believe me, fund managers, this is the first time in ages, since October, that they've not been rewarded for just grabbing it. So watch the IBB, watch the XLV, which we are also short. This is the S&P Select. It's ready for at least a test. Yep, test of the right side low. Left side low, that is. This is the Select Spider Healthcare. Let's go to Scott in Safety Harbor. Scott, we've got maybe 30 seconds. You're looking at what?
No talk, Basil. I'm still reeling from Gilead. But a quick tip of the day is Apple. I mean, anybody that didn't load up the truck this morning when it was in the 110 range should get out of the trading market because it was a no-brainer. No-brainer.
Well, I think you're right just in terms of a bounce, but I must tell you, Apple, I spoke about this before, I'm getting sell signals in my monthly charts. I would respect them. So what you want to see, Scott, is by the end of the day, it's at 112.78. You absolutely want to see the high of the day taken out, around number 114. That'll be very important. But believe me, if the market actually closes weak instead of having some kind of a counter trend bounce, if this goes under 111.50 in the next hour or so, I'd be real careful. Why? Because the tide, I always talk about the tide. The tide has changed, and the tide has changed significantly for Apple. That's the only thing. But you short-term trade, so I'm not going to interfere with that. I'm just saying that's what I'd be careful of. In the 120-minute chart, I don't like the candle forming now. I want to see if you are long, even for a trade, 114.75 is the 9-period moving average. It's got to get there by tomorrow. Hope that helps you, Scott. Good luck.
All right, bye-bye.
Thank you for calling. Okay, folks, let's do this. Just let me give you a quick wrap-up here. Then, of course, you got Daryl. So this is leg F to the downside, but it could be an alternate count, leg C, F/C. But the stochastic is very poor, 25%. It is rallying a little bit, but the MACD is very ugly. So I'm going to suggest to you that there's a chance that this week we do test the 17,037 level. This close under 17,000 on a weekly basis will be very negative. But it also says that on a shorter term position, there are a couple of stocks. There are some people, fund managers, that are going to get itchy fingers if at any point today or tomorrow there's a sudden rally that takes the Dow up from the low 150 to 190 points. I guarantee you there are going to be a lot of people saying, great, what terrific buys we've got. And that could be perfect until Monday. So I'd be real careful. The tide has changed. Treat your longs as short-term positions, unless I didn't have a chance to look at gold, but we've done that many times. Gold is acting very well as the dollar is pulling back. Gold has got the first-time opportunity to bounce really nicely. Have a great day, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.